who's likely to feel the pain of these tariffs first? Consumers, small businesses, or big manufacturers? And if it's consumers, how soon are we going to feel this pain?
Question. I think, that it's all about the framing of it. And I think that most economists, most investors recognize that the tariff is really a tax on consumers. Of course, the administration doesn't want to call it a tax on consumers, but I think that we already can see from the import prices that foreign producers are not really accepting narrower profit margins to absorb the tariffs. We know that some U.S. companies are eating the tariffs so far, but this is very early on. And so we've seen some large U.S. consumer companies like Walmart talk about raising prices. And next week, the U.S. reports the July CPI. That's the July Consumer Price Index. And it is likely to have risen for the third consecutive month, both on the headline rate and the core rate.
Okay, so I don't think I got the answer to my question. As a consumer, if we're in store, if we want to buy a car, if we want to buy coffee, autos, luxury watches, should we go and purchase those things now before we feel the pain of higher prices?
Well, I think that's why my point is really goods prices are already rising and being offset maybe by weaker service prices. But generally, goods prices are already rising. So if you want to beat the tariffs, it might be a little bit late. That's why I think we saw a surge in auto sales last month, people trying to beat these tariffs.
Understood. I think I understand what you're saying. Well, Trump has also imposed additional tariffs on India for buying Russian oil, but not on China, which also buys oil from Russia. What does that tell us?
Yes, I think this is at the very core of the problem. I think you really touch on it, and that is that the general principle of free trade has been called the MFN, most friendly nation status of trade. And this means that when you tariff a product, you tariff this product across the board. You don't show favoritism. And what the Trump administration is doing is it's very idiosyncratic, picking on India's importation of Russian oil. But you know what? If India would take that Russian oil and refine it, it can be sold to the U.S. duty-free. That is to say that U.S. Is not putting a tariff, it exempted oil and especially refined products from the tariff schedule. But also, India is not the only country that imports energy from Russia. The EU gets gas. The U.S. gets fertilizer, which is almost like energy for plants. And so I think that really, in my mind, the big problem with the tariffs is that it's going to spoil the U.S. brand. Maybe the economy can adjust.
What about
but
this?
I think that,
go ahead, finish your sentence.
No, I just think that the brand, sort of like, remember when Coca-Cola tried to change its formula? And I think there was brand weakness, damage to the brand, and I think the U.S. is damaging its brand right now.
And the risks to relationships with key trading allies, that could also suffer some damage.
Yes, I think you're right. I think that if I was in Beijing right now, I'd be watching what's happening and thinking, what a wish. I mean, who could have imagined that the U.S. itself would be taking actions that make the alliance weaker, treating its allies as if they were enemies. I mean, just think about these level of tariffs on steel and aluminum for countries that fought alongside the U.S., whether it's in Afghanistan or different wars. And it's incredible, but I think this is the real damage. The U.S. soft power, pulling back from things like USAID, and those stations that the USAID and Voice of America used to be on, now that programming is being filled with Chinese programming. So I think that Beijing is the big winner in this U.S. sort of like shooting itself in the foot.
Donald Trump, of course, Mark, has said tariffs is one of his favorite words in the English dictionary. He thinks it's going to create more jobs. He says manufacturing is going to come back to the United States. But how concerned are you that these tariffs could actually have the opposite effect, lead to job losses, slow down the U.S. economy, even lead to a recession, especially if other countries start to respond with countermeasures?
I worry that even if the countries don't respond, the tariffs are going to slow down their economies as well. We saw that today with the German industrial production figures, a sharp decline. So yeah, I'm worried that this idea that somehow the U.S. could be this island of prosperity when we're hurting our neighbors' exports and their own growth. And so yeah, I'm concerned about this. I don't really see the way out of it anytime soon. But I do think that the U.S. economy is weakening. I think the jobs data on Friday. We thought that those two dissenting Federal Reserve governors were like anomalies. The market was still thinking that the FOMC meeting last week was hawkish. But when we saw those jobs data, I think that really drove home the message that they're really like canaries in the coal mine, identifying a big problem headed for the economy, and that's the weakness in the labor market. That will get the Federal Reserve to begin cutting interest rates, even though inflation, like I mentioned, might still be rising.
All right, we're going to leave it there. Mark Chandler, thank you very much.